What if the biggest challenge in cross-border payments isn't moving money across borders anymore? Today, businesses and consumers expect international payments to be as seamless as sending a message. Yet fragmented infrastructure, multiple intermediaries, regulatory complexity, and inconsistent customer experiences continue to slow progress. At the same time, artificial intelligence, embedded finance, blockchain, and real-time payment networks are fundamentally reshaping how money moves around the world. So the question isn't whether change is coming, it's whether financial institutions are prepared to lead it. Joining us today is one of Frost & Sullivan's growth experts to discuss how organizations can capitalize on the next generation of cross-border payments. Welcome.
Thank you. Cross-border payments are no longer simply an operational banking function. They're becoming a strategic growth platform. Across Asia-Pacific, transaction values are projected to grow significantly over the coming years. But future success won't come from processing more payments alone. It will come from delivering faster, more intelligent, and increasingly invisible payment experiences that integrate naturally into digital ecosystems.
That shift is fascinating because it suggests the industry is evolving far beyond payment speed. Organizations now have to navigate geopolitical uncertainty, changing customer expectations, and rapid technological innovation all at the same time. When you look across the market, which strategic forces are having the greatest influence on how financial institutions are rethinking cross-border payments?
Three forces stand out. First is geopolitical change. Financial institutions are exploring alternative payment rails, blockchain-enabled settlement, and digital currencies to improve resilience across global payment corridors. Second is customer value chain compression. Businesses increasingly expect payment capabilities to be embedded directly into the digital platforms they already use, rather than relying on standalone banking experiences. Finally, disruptive technologies, including AI, blockchain, distributed ledger technology, are modernizing payment infrastructure, improving interoperability, and reducing settlement times. Together, these forces are reshaping both customer expectations and competitive strategy.
While these opportunities are exciting, transformation rarely happens without challenges. As payment ecosystems become more digital and interconnected, organizations also face increasing pressure around cybersecurity, customer trust, operational resilience, and profitability. Where should financial institutions focus if they want innovation without creating additional risk?
Trust will become one of the industry's strongest differentiators. Customers expect payments to be secure, transparent, and reliable. That requires continuous investment in cybersecurity, compliance, and data protection. At the same time, intense pricing pressure means organizations can't compete on transaction fees alone. The winners will deliver better customer experiences while creating additional value through intelligent services, faster onboarding, and stronger digital engagement.
So organizations need to balance innovation with resilience. Let's shift from challenges to opportunities. Your research highlights several areas that could redefine competitive advantage over the next few years. Which opportunities deserve the greatest executive attention?
Three opportunities are particularly important. The first is AI-powered financial infrastructure. Artificial intelligence is transforming customer onboarding, fraud detection, payment routing, compliance, and operational efficiency. Second is tokenization and on-chain settlement. Technologies such as tokenized deposits, regulated stablecoins, and central bank digital currencies are helping reduce settlement friction while improving liquidity and transparency. Finally, regulatory agility. Organizations that embed compliance into innovation and work proactively with regulators will accelerate market adoption while strengthening customer trust. These opportunities are interconnected and together create a more intelligent payment ecosystem. Execution. Leading organizations won't simply deploy new technologies. They'll build flexible payment ecosystems capable of adapting as customer expectations, regulations, and payment networks continue evolving. That means investing in AI, modern payment infrastructure, interoperability, secure governance, and strategic partnerships simultaneously. Organizations that successfully combine these capabilities will accelerate innovation while creating more resilient and scalable business models.
A great perspective, and perhaps the biggest takeaway is that cross-border payments are no longer just about moving money internationally. They're becoming intelligent digital infrastructure that enables global commerce. For organizations willing to modernize today, the opportunity extends well beyond operational efficiency toward entirely new sources of growth and customer value. Thank you for joining us and sharing these valuable insights.
Thank you. The future of cross-border payments will belong to organizations that combine innovation with resilience, interoperability, and customer-centric execution. Those foundations will define the next generation of financial services.
Thanks for joining us on Frost & Sullivan's Growth Podcast. For access to our research, competitive benchmarking, and best practice frameworks, head over to frost.com or email transformation.growth@frost.com. We'll be back soon with more to help you stay clear-headed and growth-ready.